Buying a home is hard enough in 2025 for those of you that are out here trying to get on the property ladder. Inflation, insurance, the actual day-to-day upkeep of a home could be very daunting, to say the least. The last thing you want to do is deal with a bunch of misinformation or myths. The purpose of this video is to debunk some common myths that are out here about owning a home, and that's what we're going to talk about today to help my first time home buyers out. So without further ado, let's get into the video. So as I stated, we're going to be debunking some myths, and the first one that I want to deal with is the down payment myth. It blows my mind, but then it doesn't, because I'm involved in this on a day-to-day basis. So a lot of you all don't know that you do not have to have 20% saved as a down payment. If you can do that, great, but you don't have to have 20% down. In fact, on the conventional side of loan products, if you are a first-time home buyer, meaning you've not owned a home in the most recent 3 years, then you can put as little as 3% down, which is actually better than FHA, which doesn't stand for first time home buyer, but it's Federal Home Loan Administration. So you don't have to be a first time home buyer to use FHA. I digress on that point, but they require a minimum of 3.5%. Okay. So you don't have to be a first time home buyer with FHA. You can put as little as 3.5% down. You do have to be a first time home buyer on conventional loans to be able to use the 3% down payment. But there you have it. That myth is dispelled all day, every day. And today, with more people having challenges with coming up with larger down payments and the closing costs, these loan types bode well for those that aren't in a USDA eligible area, because USDA does not require a down payment, meaning you can finance 100% of the purchase price, or if you don't have access to the VA home loan benefit. Okay, so that's the first myth that we've debunked, right? Let's get to the second one. You got to have perfect credit scores, right? That is not accurate. And perfect, it's subjective to who you are. What's perfect to you might not be perfect for me. So let me give you a range uh, to give you some understanding in the world of home loans, how you might look at what perfect is. In my definition, anything really above a 720, I would say is perfect. So 680 to, let's say, 700 to 719, A minus. 680 to 699, B, strong B. 660 to 679, B minus, all the way down to 500. FHA, technically you can get a FHA loan with as low as a 500 credit score if you have 10% as a down payment and everything else lines up. But it becomes much easier on the FHA side at a 580 credit score. You'll have folks out here telling you you want to get your scores up and things of that nature, so you could get better interest rates. But I would challenge a lot of those folks to reconsider that mindset, because maybe you have a bunch of past medical collections and things of that nature because you had a unexpected catastrophic medical event in the family, and your credit scores are just going to take some time to get up. But you can get on the property ladder with a 580 credit score with FHA, and prevent increasing prices and things of that nature. So it's all case by case. The myth that we want to dispel is that you got to have a perfect credit score. That's not the case. Just depends on the program and the lender that you deal with. Next myth: renting is cheaper. That's a myth. All you got to do is, if you're renting, look at it yourself. Now, from a 10,000 foot view, as far as maintenance and things that you have to do when you own a home, you might be able to argue that. And as you've always heard me say, home ownership isn't for everybody. If you're not going to own a home, you better make sure you are putting your money somewhere that they could grow for your future self. But renting in a lot of cases is not cheaper. You just don't realize the cost of moving, the cost of, just that alone, all the things that are involved with that. And rent goes up every year in most places. So that's a myth, but you have to see if ownership is right for you. So, along with the myth that renting is cheaper, does not mean that you have to be a homeowner. It's case by case situation. Next myth, uh, that you're going to wait to try to time the market to get a better rate. And unfortunately, a lot of you guys have done that. Let's just say over the last 5 years, look at what you've missed out on. And all of the experts, we don't know. We look at it day by day. There's too many factors. There's some key things that we keep eyes on, mortgage bonds, the 10-year. But those are two tools along with a plethora of other inputs that affect what interest rates are. So I would strongly advise that you qualify wherever you are today, determine what you can afford, and then move forward from that standpoint, again, to prevent the ever increasing prices of the home, get on the property ladder. And then when an opportunity presents itself, then you reposition and get yourself in a better deal. Next myth, the perfect house myth. Because remember, Luther told us a house is not a home unless there's somewhere there to turn the key. Anyway, you got to make the house a home. But there's a big myth out here that, I'm going to find the perfect house. There is no perfect home. New construction, pre-existing, these are structures that are designed with several systems: foundation, your framing, your wiring, your plumbing, the roofing system. There's a lot of things that go into a home, and none of them last forever, be it new construction or, like I said, pre-existing. So that is a myth that is out there. So don't set yourself up, because that could be a got you down the line, and set you up to thinking that newer is better and I won't have any costs that are associated with it. Not the case. Moving forward, here we are. New homes are maintenance free. That's, again, kind of curtails with the one prior, that newer is better, especially in these times. If you guys are buying new construction, I would strongly advise you to check the workmanship. Um, yeah, I'll just say it like that. Make sure you do your due diligence on the builder that you're dealing with. Check the warranties, check the reviews of folks that have been in the community longer than you have, if you can do so, because new does not mean maintenance free. Again, this is a system, okay? You have filters for your water heat. There's just a lot of things. I might do another video on that. I don't want to get off the beaten path too much, but new does not mean maintenance free. That is a myth. That is not true. Okay. And so the next one is you must buy a house. And that's not true. You don't have to do anything. I'm a proponent of home ownership because of this. This is the place, or your home is the place where you're going to nurture and grow your most valuable assets, yourself and your family, and provide the stability that you need to do the other things that you need to do to set yourself up, not just financially, but in other aspects of life. And too many times here in 2025, just recently, I've seen a couple of places, couple of situations, not places, situations with some elder folks, 60 plus. And, one wants to have that freedom and autonomy, but they can't get it because they didn't take this step a lot earlier in life. You see what I'm saying? You don't have anything paid off. The other is kind of in a bad place as far as renting is concerned. And you never want to be in that place, because, these folks that are running some of these rental units, apartments and things of that nature, they could care less. And they know that they have a captive market. So point is, not for everybody. You don't have to buy, but if you don't, make sure you're thinking about your future self, and don't consume all of your productivity today when you're younger, and then find yourself by yourself when you get older. That's not the place you want to be. But you do not have to own a home. That is a myth. Almost finished here. Um, you know what? Did we just do that one? Oh, I'm sorry. I went up. Let's go back down. Right here. I think this is the last one. The pre-approval rate is final. Not only your pre-approval, but you might hear some folks out here saying that if you don't have an underwritten approval before you shop, it's no good. None of it is any good. I'll say this, as far as the pre-approval rate, until our interest rate is locked in for whatever time interval that is, it can fluctuate. You're not going to lock in a rate in most cases until you have a house under contract. Okay. So the whole concept of a pre-approval or a fee sheet is to give you as a consumer, a first-time home buyer, a great idea, understanding of what the total cost of ownership would be, but it's an estimate. It's an estimate. It's not until you get the house, a contract, where you can find the actual insurance on said home, taxes on said home, so forth and so forth, so on and so forth, then you can really hone in. A great lender, someone that understands, should be able to get your income, assets, look at your credit, underwrite you based upon the guidelines that are out here, okay, confidently, and run that through the automated underwriting systems that we all have, right? Before you get to an underwriter. Because here's the deal. Even if you go to an underwriter, what they're underwriting is your income was calculated correctly at the time, your credit is in place, and you have the capacity for the down payment and or closing costs at that period in time. But if the house doesn't meet the standards, then the loan won't be done. If you go and mess up your credit in between that point and closing on the loan will not be done. There's too many things that can stop even an underwritten pre-approval, but that is something that's pushed out here because it's marketing, right? Unfortunately, there's a lot of folks getting in the business that don't even know how to, couldn't tell you what's on an ERLA or old 1003 in the application because everything is automated now, and they're just glorified order takers, respectfully. But when you're dealing with somebody that understands and knows how to be a loan officer, pre-approval is fine, but the rate will not be locked until you get a contract. Unless you're dealing with a builder in a building type situation, you might be able to lock and float down. There's cost associated with that. So just make sure you understand what's going on. So I told a fib we got one more. What's the last one here? Let's see. What's the last one? No, is that it? Yeah, that's it. So there you have it. We dispel some myths. This channel is all about helping you as a home buyer be able to cut through all of the noise so that you can make the best decision for you and your family. If you feel like you have a grasp and you want to move forward and understand what the next step is, then you want to watch this video here so that you can learn how to submit an application from a buyer standpoint properly so that you can get the best, most accurate approval possible in the shortest period of time. And for everybody else, subscribe to the channel and continue to educate yourself so that you won't be remorseful when you decide to buy. My time is up. I thank you for yours. As I always say, guys, let's be good to one another. Let grace abound. And until the next time, peace. Y'all be blessed.